Hello, folks. Welcome back. And today is February 6th. And futures open in another half an hour. We closed on Friday, 44.92 is what it is showing here. So I assume it must have closed around here. Now, what we had was, when I made the last video, we were here on this candle where, the price was breaking low and it went all the way to 42.12 and 42.25 was where I was looking for to hit on this line, and it poked a little bit below on this trend line, which is fine. But from there it picked it up. The week closed above. At that time I was looking around closing above 42.60, and it did held at that time. And then after that we got a very big rally from the low of 42.12 to 45.86. That's 300 plus points run. Let's see what would be this high was 808 somewhere, 808 approximately. So we got approximately 618 tested back. And that formed a good confluence to pull back some. It also formed a good confluence around 45.80 to 45.90. 45.90 was the level and 45.80 was where I was looking for it to hit, and it did that. And it looks like this was almost a 618 as well. So, and which formed in this supply area. So that kind of formed 2 or 3 confluences, and that's a good place to think, okay, now it can pause, or let's see what it wants to play out. And in this week we had some big earnings coming in, like we had Apple, then we had Microsoft, then we had Google. I think Apple was here because from there it took it up. That also because Apple resolved to the upside, or at least it picked it up from where it had sold off, and it also helped the indices to to rise up from the support it held. Let's put it that way. And then following week, the other FANGs were reporting, like Microsoft, Google, Facebook, and Amazon was the last one on Thursday. So Google again helped it to rise up, test this area. Exactly, it did that one, and that's where I said I had posted it out that it hit that 45.80 and 90 area, which where I was looking for. It formed a confluence, and then Facebook reported, and we got a reaction to the downside, which was not surprising because the price hit the supply, and Facebook also had not closed above 325, and we'll go and check the chart and we'll see. I had also explained where it was hitting a problem earlier as well. So that also didn't get resolved, and as a result we got a pullback. And then next day, I think it was next day only, Amazon reported. The whole day everything kept selling off, and Amazon also from with Google it hit 3100, and then with Facebook it kept selling off, and it closed around late 2700s. If we look at on the daily chart, so this is where it was, right? So Apple and Google and everything, and then this was Facebook, and we got a test till this demand here to this here. It got held, and then Amazon had also come to its it didn't break the low. 2705 was the area, and Amazon hit 2707. With this selling down with Facebook, it still held 2706, 2705. It didn't break its low of 2707, and that gave me an idea that since price has also fallen to this support, and Amazon has also come to the support, there could be a good probability that Amazon earnings would be better in terms of bringing the stock up. I'm not talking about fundamentals here, just the technicals, that it would be a good bet that Amazon numbers, just like Apple, just like Google, would help to bring the price up. And ES was also at the support where it had landed. So, that kind of confluenced it and we got an up movement. So whole day, there were some job numbers, and then afterwards the price kept after the initial drop, the price kept going up and it went all the way to 45.31, where I was looking. Overnight it had gone to 45.28. I was looking for 45.31. So I said, okay, fine, 2-3 points doesn't matter. But next day it actually went and hit that. And it was towards the end of the day, and this thing crapped almost 50 points from 45.31 to I think 44.80s it fell to. So crapping almost 50 points, and it closed there. So I'm not sure whether this number is right, because I had seen in late 80s, but assuming this is where it closed, so our number was 44.89 to see whether it gets held or not held. So going forward, what we need to look is, this is what we need to look. So this was the low with respect to this candle where price will trade till Wednesday, because Monday, Tuesday, and then Wednesday is CPI. So that would cause a little bit of fluctuation in terms of price direction. Now, let's say if the price keeps coming down here, but it doesn't break the low, and it holds here, then that can be a good probability that CPI may cause the price to move up, follow this orange line, come here, come down to somewhere among in this area, and then go higher. So basically follow the green path. So the orange will become the green. So that is one good possibility. But if price doesn't hold 44.89, then starts trading below 43.75 and 57 and has an interest going here, and CPI pushes it more down and this low breaks, then we are kind of a little bit in trouble, in the sense that the price may want to test the lower zone, which I had posted it out earlier, which was late 4100s, mid 4000s, and late 3900s. Okay, so it was 4192 or 41 some ATM late 4100s, then mid 4000s, 4056, 4056, 63, or somewhere on this line, 3970. I was somewhere looking for this. So assume, if the price enters this box again, then this whole box gets exposed. So the whole job, what we need to look at is where price is trading with respect to this candle, and then based on CPI, does it further pushes it down, or it goes, and pushes it up. So SPX here. So this is also, so SPX also hits this blue line, and then there it failed, hitting this supply line here, and then it came down, and we want to see, what I wanted to show was the gap. So this was Friday's gap down, and then it came and tested all the way, here, and then after that it sold off. So now what we need to see is whether first this gap it has any interest to go and fill before Wednesday. So that would be one idea to look for. If price is trading above this orange line, then this gap gets filled, 45.83, 45.83, 84. This gets filled. Now this was our original gap, 46.52. So this is what we need to see, because price came all the way up till 45.95, which leaves approximately less than 60 points to fill this gap. Now that is not much left in terms of the index movement, because this thing was doing 300 points a day. So doing another 60 points is no big deal. It can do it in one candle, 130-minute candle, and it can be done. So what I'm thinking is, there is a good probability to fill this gap and this gap. The only thing which we need to see is whether this gap will be filled before a CPI and price is hovering somewhere here, and then CPI pushes up after that, and we get this post that action, we get this gap fill. Or starting next week, price still comes down lower in this in this box, and settles somewhere here. It could settle here, it could settle here, it could settle somewhere here in between all the 3-4 numbers which I had mentioned, from 44.89 to 42.80, 42.80, 44, 42.40. As long as this low is held, 42 going all the way till 42.40 is all good. 42.25 is all good, because the low is still intact, because generally ES does likes to test lower. It only honored a very shallow pullback, to honor Amazon, because Amazon needed to resolve to upside. So, it did a very shallow pullback. But generally it comes down all the way to test this original area. So let's see whether we get this first, and then it goes up and fills this gap, and then continues higher to, fills this gap. Now, there is no guarantee that this gap would get filled and this gap would get filled, and we could easily enter into that 4,000, lower 4,000, break the low and go into those lower 4,000. So these are the two actions I would be looking upon, where in terms of level we will be trading. So I will just, for next week at least, I'll just go level by level, above this, below this, weakness here, momentum is here. So that way, basically just trade the price versus form the direction. And as Wednesday is coming, I will have an idea of where the price is. So, from there we can say whether, this gap gets filled first, or we get a lower first. Okay. NQ also, I mean, NASDAQ and QQQ also has a gap around, I think, 365 and 380. So same thing for this as well. So it came and tested this lower zone, which again exposes this box, and then it exposes this box. So this brings your price to 12,000, 12,500, the lower area, and this is late 1300s to 14,000. Now this NQ also, it hit the supply here, and then it pulled back, but it is still above the 50 MA or 55 EMA, 14,470. 14,470, it is still holding, and 14,625 is the level it is still holding. Now again, NQ can easily do 100 points just like that in a 5-minute or 10-minute or even 15-minute candle. It's very easy for it to slide down and then come back up. So I would be watching 14,400 to this number, 625, if it holds or if it starts trading below, and where it closes on a daily basis. If it closes below 470 or in that area, then I don't know that chances of breaking this week's low is higher. This is 353. This can break, and it can still come down more. Now if Amazon holds, Google also hold, and Tesla starts moving up, because generally that's what they do. If if there is no interest in continuing the sell-off, and let's say Amazon is weaker, just as an example, or rather Facebook is weaker, then what they did was the day Facebook was lower, selling off, but they wanted to hold the NASDAQ. So you saw Tesla going up and you saw Apple going up. So this is what I had tweeted as well, that though Facebook is selling off, Tesla is up and Apple is up, which means the relay race is on. So NASDAQ is mostly run on these 4 or 5 stocks only, the FANGs. Apple, Tesla, Amazon, Google, Facebook, Netflix. So all these 5-6 stocks, these are the ones which are heavy weighters, and they generally don't fall all at the same time unless there is a crash like March 2020. So Facebook was, let's say, earnings was a trigger for Facebook, and the NASDAQ is okay not to fall that much with respect to its the fall in Facebook. So then they'll move Tesla up, or they'll move Apple up. Earlier, a couple of years ago, if you go and check my tweets, I would have mentioned that at that time, BA and Apple were acting as the stabilizing agents in the Dow, in the YM, basically, because BA was a lot of news related activity happening with respect to Max. So it would come, anything would come and it would fall, but then they would keep Apple up. So, the balancing act goes on. So watch out for these signs, what is selling, what is not selling, what is keeping up, that then you will know what the index is trying to do. The idea is not to cause a sell-off because of one or two stocks, but to do the balancing act. Apple and Tesla are up and Amazon is selling, then that it's related to Amazon versus the index. So overall, look for that. Now this daily, okay, this is the most crooked, horrible lines I have drawn. So I'll remove that. So this clearly gave, when it closed, this was just before Facebook. It formed a doji and it had come to this supply area, this red line, this supply area, and it closed right there on it actually. And Facebook also did not. Facebook, let's see, okay, because I was getting a lot of query on this. See, this is the line I had drawn, and let's see here. This gives a better idea. So this was the problem area for Facebook. It tried very hard to go above this, but it used to go 225 to 243 was the number. It tried very hard, multiple times it did, but it couldn't get over this supply. And it tried. It would go for a day, or for maybe first two candles, 30-minute candles or a couple of candles, and then it would start selling off. It never held that 340 area to 350 area convincingly, and it would always kept falling down towards 325. So on the earnings day, I mentioned that Facebook, if it closes above 325 or best above 331, then it has a good chance to hitting above this problem area, and we would see price here. But unfortunately, it did not close. It closed below here, actually, below this 325, and it was here, which means this supply it was the only one which was holding it, and it could come here 300 or so, and then this was the area which it could have given it support. Because remember, I had said in my earlier videos that the moment price tries to go below this, then all this area is exposed. Expect the price to fall on this trend line, and this is exactly what it did. It came and fell on this trend line, basically on this box. So it came and fell on this trend line, and it's holding 233 price. Now 233 is, if I'm not wrong, it's also a weekly 200-day 200 moving average on the weekly basis. So that's there. And lower, in terms of the price cycle, I would have preferred for it to come in this box, this 197, because this 197, so though price is also forming a conflict. So this is how, okay, let me go here. The high was 385, okay, 385, yeah, the high was 385 from here, and I was looking around 375 to 400 something, 410 or so for the price cycle to hit, and it hit 385, which is within the offset of the price cycle target. So from there onwards, we start assuming that the price cycle is getting completed, because generally it's a box, okay? The number is, let's say here, to 300. If it hits the exact number, it's fine, but it can hit here or it can hit here, and that would still be within the offset of the price cycle number, because generally stocks, they don't hit the exact exact number. They sometimes, you know, overshoot, undershoot, but it's within the offset. So it hit that within the offset, and from there it's kept coming down. So from this high of 385, 233 to 197 is the confluence where a strong demand is there for it to be, for it to stay first, for it to stabilize or get picked up. Now what we need to see is, this is a very big candle on a weekly basis. Okay, so it's possible that 233 will be held and price may go here, somewhere here. Then two things can happen. This is the bottom, and price may get picked up from here, or it may just poke to 197 as well, and that would be a strong demand to get picked up with respect to the cycle. Okay, now if the whole stock market is doing good and there is no signs of sell-offs and everything is all good and we are back in the bull trend, or the price is moving up, then chances are this will also stabilize in this area and then continue to move up. Now, one more thing is that with respect to time, this can take some time, depends on what you know, the management of Facebook or Zuckerberg comes out with in order to repair this damage. But look at BA, right? So once this 441 was hit, 440 area was hit, this was a very strong uptrend and a lot of consolidation, and then zoom, price moved up. There were no sellers. So one of the things which I had mentioned as price was hitting here, because I was telling the people who are closely following me that, you know, protect your profits in Boeing, and you know, it can pull back or it can show a reaction. Now I wouldn't, at least this was what, 2019. So you know, in terms of experience, I was still not there where I am now. So I wouldn't know whether it would zoom, you know, lose 50% or more than 100% or more than that. But I was expecting the price to come down here somewhere in this area. So I said, you know, if you are trading, so protect your profits, or, you know, do something with your commons in order to sell some calls or some stuff like that. And people were like, no, the trend is so high, this is going to 500 plus. And you know, when there is such a strong trend and everybody is invested in it, everybody is holding it, it cannot sell because everybody is holding it, nobody's selling it, right? People are actually looking to get into it, so there's more demand than supply. So I remember around here I had made one statement that because I know some person was arguing with me that it cannot fall, Nargis. I said, in stock market, we shouldn't use the word it will never happen, or it cannot do that, or it will do that, because we don't know what's going to happen. It's a game of probability. The probability of this happening can be higher versus it will happen. Okay, there is no word as it will happen or it will never happen. So it's just a game of probability. So the one sentence which I had used at that time was that things need to pull back or do it gracefully, otherwise nature will force it, make it do it forcefully. So the thing is, things should happen gracefully, otherwise nature will do it forcefully. So gracefully and forcefully. So I remember I had used the statement at that time, and for some reason I myself had liked the statement very much, and I was like, oh my god, I'm becoming philosophical. So something like that. And a few people, including me, we had gone short here, and I remember that guy, he made some good money on it, $20,000 or so, just by shorting it here. So at that time, I mean, I didn't realize it will fall that much down. Somewhere here we booked the profit, and you know, and so what I'm trying to say is, Boeing cycle completed, it came down to its original where the cycle had started, and since there it's just passing time. So that time for the next leg hasn't arrived. So the price is just hovering in this 200 area. So late 200 to 225 is where it's been dancing around and nothing is happening. So that's what I was trying to point out with respect to Facebook is that, when such a big fall happens, and if there is no fast repair from the fundamental side, then it may take some time for the price to go and retest back up, or if the price has arrived in terms of confluence between 233 to 197, the time needs to arrive as well for it to, show some reaction. So that's what we need to see, whether it will be another Boeing or it will be so much better than it and we get a faster push up. So watch for that in terms of timing. What was next? RTY. RTY. Yeah, RTY. So this guy, 1 year of consolidating, then distribution, it came down here. Okay. So, it came down and, it along with other indices, it tested that, but this was the most weakest one. Okay. So it was not able to hold at 2000, 2025, and then, it again pushed it down. So it is still hovering in this box. Okay. So what we need to see with Russell is that it also goes back inside this box and tests higher. Otherwise, remember, once it loses this area, there is nothing to stop it, because this is a straight line. When we have a straight line, there is nothing for the price to hold support other than very minor levels coming in from a shorter time frame. See this monthly candle, 1, 2, 3, 4 months of straight run up, and on a monthly candle, there's nothing to hold the price other than these high lows and the body of the candles, right? So that's where it's hovering around, in the middle of this and all that. On a daily basis, so on a weekly basis, you got this, a little bit of this cluster here to hold it. And if you go on the daily, you may find a little bit of a more, so here, so, little bit here, little bit here. So it can ladder and come down, or it can straight away come down. So again, if the price is holding, it doesn't break below this, or if it breaks and then comes back up inside this box, then what we need to see is consecutively the price has interest in moving up here. So once it enters here, then we know, okay, it has interest towards 2100. Then above this, it has interest towards 2200. Otherwise, from 1937 below, no, the price has interest to move down. YM is also, holding this yellow line, and the price is here. Somehow, to me, YM looks so much better than the others. It's more cleaner. Let's put it this way. It's more cleaner. See this box, then here this box. So the up and down movements are more visible than some zigzags in price. So it holds this line. You want to go here, holds this line, then you want to go here somewhere here. Or if it breaks below, then you want to test this area, and then we have tons of areas going into this one. So we will see that. And as far as, let's see, Amazon. So this is what the price action had happened. This was our sell-off. Price had come down here. Then we got this consolidation. The indices also have this whole week where price just was moving in a 300-point range on the ES. And then we got the rally. It went all the way up here. And then next day was Facebook. It gapped down and it kept selling all the way till it 2766 and the close was 77. But this was 2707. My level was 2705. It held that. This thing did not break that. So I was expecting that this this ABC pushes back up towards 3137, 3250, 3300, 33, 36, 65. So it, I think after hours was 3300 exactly to the dot, but during the day it only did 3224, but it didn't close around 3214, which I was looking for. And at the end of the day, all the indices sold, so this also pulled back and closed at 3152. So now again, we have to see whether it comes and fills. So this low was 3012 and this high was 2889, 2885. If it has this interest to fill this gap, okay, because if the indices come down, then this will come and fill the gap. Okay, so keep an eye on that below 3137. If it starts losing, then and indices are also weak, then they may all come down and fill the gap. So it can fill the gap because it hit this orange line. Is it orange? Yes. So it hit orange or red. I think it's orange. So it hit this orange line and resisted it and came down. But if it consolidates here and even after filling the gap, it holds, and then the indices also stabilize. We can see the push up going towards 3365. So with Amazon also, what we had was this Z working on, right? So price kept here, then we got this back up, and now this is here. So this is kind of an inside month for it. And the candle does look good. Within the month, it can go up and down, fill the gap, and it can still close well. So if it continues to go up, so see it almost 3365 is the upside, where it starts entering a little bit more clustered resistances here, this one. And again, 3541 is the level where past it has found a lot of resistance to go over. It had gotten only 2 good spikes above that price. Otherwise, it always lost 35. It went there, it tried it, but always kept losing. So going forward, if all this noise is captured and the price trades convincingly with good volume above 3541, 3601, then it can still go back and hit this 3750 area. 3750 area, and then above this zone we have that 4000 area, 4097 to be precise. But again, a lot of work to be done. So if at all, 2 things can happen. Definitely there'll be volatility this year. The whole year has started this way, and I mean, assuming the Chinese astrology, the year of the tiger, then, oh my God, tigers, just by the animal, it has nothing to do with the astrology. A lot of energy, right? A lot of energy and very powered animal. So who knows, we may get powered moves. Doesn't matter the direction. It could be up, it could be down, volatile. So, the only thing which makes sense in this environment is to be precise on your risk engagement. Doesn't matter. So book your profits on time, especially with options, and make sure your losses are small, because we are in this game as long we have our capital. No capital, people blow up their accounts and then there's nothing to trade. And if you're a long-term investor, then start thinking what your buy prices were, and what makes sense with respect to your risk and your portfolio size. What can be the plan, if there has to be a plan, because everyone keeps talking that this thing is going to tank, and this will not, this meaning not Amazon, but the general market is going to crash and all that. And that can happen. The only thing what we need to see is if this 4700 area was the actual top, or this is going to give us one more blow of the top rally towards that 4900 to 5185 above 4700s, and then that would be the top short term, or otherwise I don't know yet. But and then from there it gives a big down. So it goes here, it tests here, and then comes all the way down here, here or here, wherever, or it goes up 4000 and then comes all the way back down. Then depends on where the price is. It could be inside here, somewhere here, or whatever that game plan would be at that time. So the whole idea is think about your positions, what you have, where you had them, what makes sense to you. In the worst case scenario, where should your stops be if you want to protect the profit, or if you want to protect the capital? If losing the profit may still be okay, but losing the capital can hurt when big drawdowns happen. So always have that idea of where should my risk is, or so you should start engaging the risk. So we will see that. What else was there? Amazon happened. Google again, 3035. It hit it precisely 3025. It hit precisely that area. Earnings day, and then it pulled back. It gave back almost 150 points, I think. And it's still this box is still working on. So it is still providing a rate. It hasn't settled below this, and it hasn't settled above it. So now 3025 to 3137 is still, I'm looking for it to engage and see what it does beyond that. If it doesn't engage now, then like rest of the other stuff, would it come down here or here or here, depending on what's happening in the market. So keep an eye, where price is trading. If it is in this box, then you can play short-term options and then make some money. But if you are thinking of making a big move, then the options may not be that rewarding, because over time your options get decayed, and trading within a tight range doesn't help much, unless you are very short-term trading, and 100 points on Google or 50 points on Google or Amazon can still reward you, basically. Tesla. Now this guy has been hovering around 900. It hasn't done much past 2 weeks after its earnings. It went to test that 841. It held that area, and now it's back above this 901, still holding it. So it's just ranging between 901 and 931, 901 and 931. So the candle looks good, has showing an interest to go up, provided the markets are also stay up. Then this, it needs to enter here, cross this here, and then go up here. This area would be a lot of chop, as we have seen. This can be a chop, then you can have some good range in this one, and then above this area there could still be some good ranges available. But here this looks a little bit more clustered than these areas. So again, just like Facebook, this found the support here, right? Yeah, so it found the support here on this one. So as long as this is holding, there's still some interest to the upside. Otherwise, the price has still this exposure here. A lot of exposure can happen, just like Facebook. So be mindful of this, where price is trading with respect to this this original supply and demand area for it. So it's still liking the demand here, and it's there. So price needs to push out of this, go here, so that it gives an up movement, and just watch out if it's And if it breaks this low, then you know it wants to come on the lower side of this candle, and then it breaks this, then you know that it has interest to come down to the 750 area. 750, 757 was the 757 was the level, and 750 is like more round number, proper round number in terms of quarters and halves. So look for that, and if that area holds and or not hold, then that way. Netflix is like, yeah, Netflix also did a proper 350. Netflix also. This area was also its breakout, and it came to test this this area below. Almost it did this one, 353, 363, this one, and it got so it got accepted at the upper demand area, just like Facebook, the upper demand 233 area, it got accepted. And let's say if there is weakness, then the lower demand area is also open, which is 250. Okay, but it went up, it retested this 457, and then it pulled right back. Again, holds this zone, it has interest to go back up, capture 475, 500, and then it enters in this whole box. See how much noise is there in this. So it can get wacky. Once it enters here, there can be some noise, and then price wants to break out or not from this area. Again, above this, below this, above this can be your thing. Now, Apple hasn't done much after its earnings. Okay, it came down this 150s, 152, 154, 155 area. It held here, and then the earnings pushed it back up. Oops, what is this? I think this must have come from a lower time frame. So, and then it went here, it tested this, and it hasn't done much in the, it's in its early 170s to 175, 176 it tested, but it didn't stay over 175 or even 176 for that matter. And my 183 and 1 cent hasn't come still. So I'm still waiting for it, whether, if all the indices wants to go up and fill that gap, like XPX 4652, then probably this is going to hit that 183 and 1 cent, which I'm looking. So watch out for that. Again, below 169, weakness, again, back to all this, and oh, okay. So it must have come from the daily chart. Yeah. So we just got tested this area, and above 176, it didn't show any interest, but it's still on the upper side of the price action versus on the lower side of the price action. Like the others are a little bit on the lower side of the price action, and Apple is still on the. So I would look for this to hold 170, 169. Inside this, still the price can move up. Below this, it can come down and test a little bit lower, somewhere till here, maybe 164, 165 back again in this cluster. And if it holds, then this should push actually a little bit more higher than 183 as well, because this deeper pullback can give it a nice trampoline jump towards a little bit higher, 189, 200, or yeah, somewhere around 196, 200, it can give a jump. But first, 183 and 1 cent is what I want. Some folks were posting their ER. This is what 10th February is next week, because today is 6th, right? So this guy, this is where I had found the stock, around here. Somewhere here I had found, if you go and check my Twitter thread, you would see that when I had posted it, it was around this zone, and then I'm not sure, I think this must be the earnings gap up. So it went up and it fired the higher cycle, and So it almost did 400%. It must be 425, 4, yeah. So it hit all the upper levels. It hit 176, almost 177. And from there, it came down to its original area, 48. And then 49 was a good support. And 47 was its low, all-time low, 46.50, almost, yeah. So if you had gone long on this candle, assuming 49 can show some reaction or just above this high, then this did went to 68, right? So from 48 to 68 or 49 to 68 was a good jump in the price to play this one if you wanted to, but still it is above, the price is up, still above this candle, and it reports its earning. Now, if this low is good, okay, then I'm expecting this price to move around to 75, 8 to 75, 85, 90 area in this zone basically. Here. So, between these two lines, the price can enter and the earnings can resolve here. So this would be an important, because I think the last earnings was pretty good, and that's how the cycle was fired long, and it had very high intensity. Like all the other growth stocks, the cycle started and it didn't stop until 2 or minimum 2 and almost 3 cycles most growth stocks have run. And it did come back to all the way to the original starting point of the cycle, but it's still holding the low, which is a good positive thing. So as long as this is holding, or this is also holding, the resolution can be to the upside into this supply zone of 75, 80, and then towards 90. Let's assume if this is the low, then in terms of fib retracement, yeah, so in terms of fib retracement, it can do very well with respect to price like 100, 112 or 128, but first would be getting accepted in this zone. Once it gets accepted in this zone, this would automatically come. At least 100, 112 would come easy, provided it gets accepted in its original cycle starting or cycle firing level. It can do that. Oops. Who was having earning? I don't remember who was having earnings. Hold on. Uber has, Twitter has it. Twitter has it. Upwork, Affirm, Twitter. I haven't seen Twitter. I mean, I go on Twitter, but I haven't seen the stock where it is. It's at $37. So most of the stocks look the same way, meaning, see, one of the things which is happening is, which I did say a few times, but it takes some time to understand and digest this cycle work, right? Because we still operate on the fundamental level, the momentum level, and price is moving. When price is moving up and fast and it's high up in the sky, nobody wants to listen that, hey, this can pull back. Nobody wants to listen to that, because it's somebody telling you that your whatever profits you gain that can get lessened, right? So psychologically you don't want to hear that. So when I mentioned that, most of the stocks are at the completion of one big major cycle. So let's say AFRM, for example, it started from here, say that was $46, and then it went to 176. Just in terms of percentage, simple math itself, it's very high, right? In a very short time period. So time is of relevance, okay? It's not like the stock went from 46 to 176. The importance or the relevance is of time, that within a few months, it went 300%. That is of essence, that when your cycle fired, it completed it one big, or rather two cycles, it completed it very fast. Now when that happens, okay, if it just completed one cycle, that is still okay, because that's still, you know, doable. But the second cycle is almost double the price of the first one. So which means that you are firing almost 100 to 200% from where it is now. So when that happens, that's a very big jump in price, and you really want to protect your capital. Oh, sorry, protect your profits as well, you know, around that time, because that second leg of the cycle can become very tricky and it can suck a lot of people in. And that's what, you know, most of your stock has done. Take it Upstart, take it Rivian. Rivian is anyways a little bit very new stock. So, you know, take it AFRM, take it Facebook, even your Google and everything, and Netflix, all this, you know, NVIDIA, all this, you know, they had completed their cycle, and they stood there for some time, still luring people in. Okay, you know, I'm going to go up, come. And people actually believe that. And that is the point where it gets really confusing, because it gives a notion that I'm going to fire higher, I'm still continuing to go up, and that's where most people get sucked in, and then whoosh, it just, you know, collapses, and you get this kind of price action. So that's the one which I was trying to call out. Be a little bit careful, guys. You know, most of the stock, especially when most of the stocks are coming together around the same time, including the indices, making a big cycle, you know, cycle confluence, then that's where you need to pay attention and make sure that you know, you have your head on your shoulders. So that's a point where it's very important to keep your head on the shoulders, which means keep a very close eye on your price, make sure your profits are protected, make sure you have a plan. Okay, you know, it takes so much of hard work to invest in a stock or find out which stock is good, which company is good, what they're doing. So many numbers are there to look for in terms of fundamental and in terms of technical analysis. You're earning your hard-earned money. Most of the people are doing a job or working a, you know, business or whatever work you do. You take some savings out of there and then you invest in the market. So the whole idea should be, how can I keep the profits which I make versus you know, give them back away all, right? Because what I've heard from a lot of the people last week and before that also, people were reaching out to me and saying, hey Nargis, I'm a bag holder on this one, you know, Facebook, what should I do? Upstart, my price is 400 and now it's under 100. So at that time, what can you say, right? Other than what's the decision you want to make here? You should have made the decision at 300, or you should have made a decision when you were 300 or 400 or 500% up. So basically, laddering your profits is always laddering your exits is always a good idea. You bought it here, you know, then what do you think here? Do you want to add here or here? Or if the price is breaking out here, you also added here, let's say, and then here it's almost at the all-time high. It went above that all-time high. So do you want to ladder the profits, ladder the exits, 33% out, and then some 33% out, and then once it, you know, it came back here, tested this demand, it went up here, but it never went above that. So this made a bearish ABC, and see the price has come down now all the way in this area. So would this be your exit here because the price is giving back up? Or, you know, some exit would be here and then some exit would be here, final exit would be here, for example. Again, it depends. And then you can keep the last 1/3 of it as free runners and, you know, play with it, because it doesn't cost money at that time because the capital is out and you book most of your profits. So, you know, you can keep the rest of them for free to see what price can do. And then, you know, at the end, have it at some, you know, either at break even or at some loss or maybe some percentage of profit, depending on what that company is, how much good the fundamentally it is, and how much you believe in it, you can play that. So this Twitter also, what was the high? 75 was the high, and then this went to 81, almost under 81. So I think I haven't done much analysis on this after some time, but this list looks like a bearish ABC coming back into this box, and looks like this is where it is holding now. Again, above this, below this. So if this reports, when does this report? This reports on 10th. Oh, so this is also 10th February. I think Wednesday, a lot of companies are reporting in terms of CPI as well. So if that is the case, then, yeah. So this I'll have to recheck on Wednesday again. If it is after hours, then Wednesday morning I'll check where the price is. It's possible that it can get picked up in this demand, and the price may push it up to 44, 40, 44, somewhere here, the upper side. This look crooked. Yeah. Here, and otherwise, if not, then it may come down to the lower 27s, 27, 25. Yeah, 27, 25. So depends if this is if this makes a good move. A straddle may not be a bad idea if the price is still around here. Let's say Wednesday morning price is still around 35, 36, then 40 or 33 strangle can be played, or a straddle, ATM straddle can be played as well, which can be rewarding. But if this moves only $2-3, then probably they may kill the premiums. So Snap was the another one. Like, now look, this is the same story as Facebook in the sense, in terms of price movement, not in terms of the fundamentals. Again, the price was here, it fired, and it went to 83. Because I remember I said that this will fire higher above 90 or 83. I don't remember. We can check the thread on Twitter. But I think, no, this had fired the higher cycle, if I'm not wrong. Let's see. Snap. Though above 73, it resets the price. It's not rise, it's price. Price cycle firing higher towards 197. So it is above 183. Okay, 183. Oh, sorry, 73. What am I saying? So price did hit above 73. So the target, the long-term target, if the company survives and the fundamentals are good and everything else, the target is 197, and that is for future. But since it completed its cycle, see what it did. It completed cycle at 73. It fired higher. It lured a lot of people into it. It said that I am resetting my target too much higher, and everyone got long in this zone, and then this thing crapped. So it did react. So from here to here, it must have done 2 cycles. Okay, one from here to somewhere here, and then from there to higher. And there it sucked everyone in, and then it came back. Now it came back to its original kind of demand, 25. Okay, 25, 23, it came down there. And from there, I didn't know that it was its earning, but I did tweet it out on the day of the earning that 25 is a good price and it should get picked up from here, or at least bounce or reaction. But unfortunately, I did not know that it was having an earnings. Otherwise, I would have, bought some lotto calls on this, some 25 or 26 strike cheap calls, assuming this is cheap still, but whatever. And then, this would have rewarded well. But I did play this, once it pulled back. So it hit here, and if you go, so here, so it went up here to all the way to 37 something, and then it came back here, 35. So I think I entered somewhere here and then played all the way till here. So it I think after hours price was 39.95 or so, somewhere there, and then it took that out 40. So I was still looking for 41 to 44 to hit. I mean, not on the same day, but the following next 2 to 3 days. Unfortunately, the indices did sell off, and this also pulled back from 40 to 39, 1 point-ish, it did pull up, but it still closed well with respect to the pullback in the indices. So that is still okay. So as long as, it's holding this demand, this is just like, I was talking about Facebook, same thing. Here to here, a good demand, and then all the way it can go to the other side as well. Oh, this is $2-3. Okay, so disregard me because I know people can get upset. So assuming this demand holds, then we still have. So now see, when it came down first, and then it had an earning. So this got a nice push out of that demand based on the event. Okay, so it got a nice reaction, but Facebook came down after the earnings. So holding the demand can be a little bit tedious because after that there is no event, right? And people are thinking, oh, what can happen? Facebook is going to do this, metaverse is this, blah, blah, blah. Tons of talks are happening. And then you have Amazon, which is doing well, and people are believing that Amazon will do better, Tesla will do better. So would you rather put your dollars in Amazon and in Snap also versus Facebook? So those kind of decisions, when you try to take with your money, then the price action becomes tedious for something like Facebook to push out of the demand faster or sooner rather than later. So that's the difference between this. So that's what I wanted to talk about, I think. And last but not the least, let's see VIX. So VIX is still holding this orange line, but it is below 25. It went below 21, and then it picked up from there, and it tested 25 and closed below 25. Now again, between 17 to 25, it can range until it breaks out of one of the range. Either it will go below 17 or it will stay above 25. Staying above 25 can cause more volatile environment, meaning we'll get back to 200 point a day kinds. And then this 33 to 37 is again the zone where it was not able to hold. But once it pushes out of this 37, 38 area, then there's hardly anything for it to stop here other than some few prices in the past. So next range can easily be 50 or 50 plus, and below we are back to 17 and below. So again, I'll still maintain 15 to 12 or 15 to 11 it comes down. That would be still a very good buying point, because in the short term, at least once a year or twice a year, it does reward, right? So 12 to 15, it's still a good hedge, considering if your portfolio is net long. So I think that was it. Today's video did get a little bit longer, but I do hope you guys watch it, like it, subscribe to my channel, and also like and retweet my Twitter. Where is my Twitter? Here is my Twitter. Here is my Twitter, and help me increase this number, guys. Come on, you can do it. Let's get to 10K. Looking forward to it, and have a great weekend. I think the market is open. And where is ES? It's showing it's 2 points up. I'll just check where the market is, and then I'll shut down the video for today, for this week. Yeah, so 44.88 to 44.97 we are. So it's a little bit up, considering there was a sharp fall on Friday. So let's see how price does. So happy trading, and let's see how price does till now to Wednesday. Okay, take care.